Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is February 16th, 2013. Lots to talk about, so let's get started. All right, but of course, before I get started, I'd just like to say thank you very much for hitting those like buttons and watching my videos in the first place. I do appreciate it. Okay, so let's just get right into it. Again, I'm going to try to make this video as quick as possible. I know I always say that and it ends up being half an hour. So today, I'm going to make it a point to make it as fast as possible. This is the chart of the SPY, which is the ETF that tracks the S&P 500. Now, what I'm going to do is load my drawings just to show you what's going on here. We still have this mathematically calculated level here at 154.10. That is coming up shortly. That's even if it gets there. I'm not sure if it gets there because we do have some signals here that are indicating a possible reversal, but this reversal of indication is not something that I would actually take a trade on. Even if it does reverse, I don't think it's going to be reversed very big, but there's always that possibility. Now let's take a look at this here. 154.10. It's the market has just been floating up with low volume. I mean, we almost have no volume in the markets whatsoever. Last week or this past week was the week that options expired. This past Friday, options did expire. Actually, today options expires, but yesterday was the last day you could actually trade any type of options contracts. So that's going to put a little caveat in our analysis today, simply because yesterday you're going to have a lot of volume, and that's expected because a lot of contracts and options or options do expire. But let's just look at this in a non-volume perspective for now. We just have this float up in the market simply because there's just no volume, absolutely no volume. And again, like I always say, when you don't have volume, you always have to expect a little float higher. And in a lot of cases, the retail trader cannot buy with high volume, but the institutions can, like the Feds and the institutions, they can buy in high volume. But right now, what this is telling me is that they're already in there. Let's take a look here at this volume. On this day we had about 100 million. On this day we have 73, and then we go all the way down to only 65 million. That's it. And then we spike up to 82 million, and then we go a little bit higher at 80 million, but that's still ridiculously low. And on Friday, boom, we had 215 million. Again, this is not unheard of, simply because this was the day that was the last day that you could trade options contracts, as today options contracts expire. So it is likely that you're going to have this type of volume spike, but we cannot disregard this volume spike simply because it is the day that options expire. It's just something expected, but not necessarily something that we should ignore. Okay, so let me get back to that volume part later. I just wanted to show you how much volume we had in the week. Even though it was the week of options did expire, I would have expected a lot more volatility. But again, 80 to 90% chance of volatility, and then you still have that 10 to 20% chance that it won't. So from all these videos I've created, I've always said that every single options expiration week that we've had volatility, and then this week we don't. So just keep that in mind. Nothing is 100%. We just give everything, and we trade, or I trade based on odds, right? And that's how this game is played, pretty much. Okay, so we created this candle up here, but what I wanted to show you was that this candle isn't necessarily a candle of signaling a reversal. Okay, just keep that in mind. This is not a reversal candle in my opinion. Some may argue with me, but in my opinion, this is not. If we had gone straight up here and this candle here became a reversal candle on higher volume, meaning if I got this volume on this day here, which is this candle up here, then that would have been different, and I probably would have taken a short. Okay, but it didn't. What's happening now is we came up, and now it looks like we're just trading sideways for a potential of getting up to the 154.10. So let me take a step back here and then explain to you what I think may happen on the bullish side or on the bearish side. Okay, because it could happen either way. Just like anything, nothing is 100% guarantee. So let me just get right to it. Now, on the upside, it looks like we could potentially be consolidating this 20 moving average comes up. Once we get into this 20 moving average, we can pop right into the 154.10 and possibly into the 155.44. That's always a possibility up there. Okay. On the And if it does hit the 154.10, again, I'm probably going to initiate a short trade at the 154.10. And then my stop out will be anything that closes above the 154.10. So that's my plan for that. That's only $2 away. Okay. Now in the bearish, if this is in fact a reversal, simply because we are a couple of things, we are definitely oversold. I'm sorry, overbought. Okay, we are just floating higher. All we need is a lot of volume to come into the market to bring this market down. What do I mean by that? Well, like I said, the institutions are probably already in the market. Their money is already in. This float higher is probably just retail traders like you and I, except these are retail traders that don't know any better. Okay, so they, on the news they said the Dow Jones is up 200 points. You better jump in the market now because I think the Dow Jones is going to go up another, I don't know, 1,000 points. Okay, so CNBC likes to do that, likes to hype it up, and that's when you have to play the contrarian, right? So we have this huge float up here. We had this big pop here, and then we just start floating higher. This is telling me that the retail trader is slowly going in, and this is when the institutions are just ready to pull the trigger and start selling off, and then all the retail traders start losing their money. So when CNBC is bullish, I become bearish, not immediately, but I look for the bearish signals and start selling the market instead of buying the market. So that's one, overbought. Two, we also, again, even though Friday was the day that the last day that you could trade options contracts because they do expire today, we still can't ignore this. This volume is just tremendous. Okay, I mean it's higher than I don't know how many days over here, but it's just been really, it's just a large spike in volume, and that's something that we cannot ignore. Okay, and it doesn't look like that this volume is based off of a breakout. What do I mean by breakout? So there's two types of volume spikes, in my opinion. First volume spike is indicating a reversal. Second volume spike is indicating a breakout. Let me give you an example of a breakout. Or a breakdown, for example. So okay, so let's take the obvious. Let's look at this volume spike here, which is pretty, that stands out just like this volume here. If we look at this candle here, this was not a reversal candle, obviously. This was a long red candle on high volume, but this is actually signaling a breakdown. Right here we have a base, right? We come down, we start consolidating, and then boom, we have this huge candle, right, on high volume. This indicates obviously a breakdown that and the volume verifies and validates that breakdown to continue. Okay, that's your first type of or it could be your second, it depends how you look at it, but that's one type of volume spike that indicates a validation of a certain move in the market. The second one is obviously the reversal. So let's look at a volume spike in reversals. Here's another obvious volume spike, right? So we have this volume spike and we have this volume spike, and we have a reversal candle here on a mathematically calculated level, which was 135.40, and that indicated a reversal, and we just been going up ever since. Okay, let's see what else looks like a good volume spike here. We have another volume spike here. This one I didn't take the trade, but this was a nice engulfing pattern. Okay, beautiful engulfing pattern, almost hitting this level here. Oh, I remember this time when I had actually my order in and it didn't get triggered because it didn't go low enough. In any case, boom, we had this huge, pop up higher on the engulfing pattern, and then we just continued higher from there. We have this this high volume spike here, which I didn't take the trade, but this really didn't indicate a reversal pattern because again we needed 3 days before we can indicate a reversal candle. But anyways, if I keep giving this tutorial, I'm gonna go way over the half-an-hour mark. So that's pretty much the way I'm looking at it. That's my bearish sentiment, which is high volume in an overbought market, which could give us bearish signals. And then in addition to the bear, right? So this is even more. Let me switch to the weekly chart. Alright, this is the weekly chart, and I'm going to delete all the drawings here. And this is what I want to show you guys. Using standard standard without mathematically calculated levels, just using standard technical analysis, we can see that if I draw a line from this pivot point straight across, that we're right into another resistance point. Okay, so my drawings is the 154. Let me just load that. 154.10. So let me just delete that again. And I'm going to put in a level of 154.10. If, okay. So it's probably extend to the left. Alright, so 154.10 is this pivot point up here. Okay, so we have this pivot point here, which is what we're right into now, and then we have another pivot point there, and then ultimately we have this pivot point all the way up here, which is at the 157 level. And amazingly enough, I do have a mathematically calculated level at exactly 157 no cents. Okay, so just keep that in mind. Again, let me delete all my drawings and show you the close-up of this weekly chart, and it's just been going straight up and it has not pulled back since. Okay, so just keep that in mind that we are due for a pullback, but I don't know if the pullback is going to be very big. And we've had all positive days for the past 7 days. Okay, so keep that in mind that we may have a red candle coming up. So that's my bearish look at it, and when I say bull and bear, I mean short term. So keep that in mind. I don't mean long term at all. So I think that next week we could possibly have a little bit of a turnover, and that weighs more than the bullish sentiment. But again, I'm not gonna step into this market just yet until I get the appropriate signals. I have to be disciplined and follow my rules. And right now, even though with that beautiful volume spike and we could still get that reversal, I'm gonna have to sit back and wait until I get something a little bit more solid. Okay, so that's my opinion on the SPY. Let's jump to some other charts here. Alright, actually, I'm gonna switch over to the dollar because I think this is very important. Let me load my drawings to make sure they're fresh. Alright, so when I spoke about the dollar in my last previous video, these are the things that I recalled saying. Okay, so first of all, I did mention the $80.61 level, which is going to be resistance. Okay, so last week we came very close. We actually had this upper trend line here that we broke through, and we actually came very close to tagging the $80.61 level. In fact, the high of this candle was $80.59, which is 2 cents off. Okay, so that's not bad. That did hold as resistance. We came down right into these two moving averages, which is obviously going to be very good support. Okay, we got a bounce back into the $80.61 level, pulled back right under this upper trend line here. Okay, and then on Friday we actually broke above this upper trend line here, which could be looked at as a little bit like this at worst case. Regardless, we closed above this upper trend line here. What we need to see is a close above this $80.61 level, 61 cent level, and then I would say that we could potentially get up to the 200 moving average, which would give pressure on the markets, and that also indicates a bearish sign. What I want to see is either a close above the $80.61 level, but even better, we need a close above this high of this candle here to indicate a possible tag of the 200 moving average. Okay, so keep that in mind on the dollar. Again, the dollar is inverse to the markets. Dollar up, markets down, and vice versa. Alright, so this is for my good friend Freddy. How's it going, Freddy? This is a chart of BAC, Bank of America. And you know, I used to like trading Bank of America, but the chart just has been very, I don't know, not to my liking right now, or as of now. But regardless, I will still do a analysis on it. And let me kind of just zoom in here and make this chart look a little bit better. Alright, so a couple of things. BAC is definitely in an uptrend, and there's nothing indicating a reversal of trends just yet. Right now it looks like it's just been, you know, a float up higher, and it could potentially get up to this resistance point here before having a small pullback. Now it really depends on how strong the pullback is, but one thing that I want to keep an eye on is these two moving averages. Okay, so BAC is a stock in strength, meaning if I would trade BAC, I would trade it long versus short, but I would wait for a pullback before going long. Again, these are just, you know, speculations of my opinion. Okay, now these two moving averages, if for whatever reason BAC is able to close below this 50 moving average, that's going to show me already some weakness, and that I would stay away and look for a pretty good support level, probably around this area here, if it can even get there. Okay, and interestingly enough, I actually have a mathematically calculated level at $14.28. Again, these mathematical calculations, as you know already, doesn't mean that it's going to get there. It just means that if it does, there's a possibility of a pullback. Now this green line over here, this is something that I just use standard technical analysis for, and let me just show you real quick. I'm going to go back 20 years on the weekly. Actually, I'm going to go back 20 years on the daily. I think there's going to be a better representation of it. If you look here, there's a gap. Let me just zoom in here. There's a gap fill right here in this area here, and I really kind of like this spot because we also have this pivot point here. In fact, we could actually turn at this pivot point already. And if you just zoom out, let me just move this to the right. I don't even know if that was the one. And there you have it. Okay, so that was the line over here. So this area here is going to be around the $12.81 level. The actual gap, however, let me just zoom out here. The low of this candle here, or the gap fill, would be $12.82, in which case I think there's going to be pretty good resistance there. And then ultimately the $14.28 level, I would actually consider looking for a short trade at this level too, if it even gets there. But again, keep one thing in mind: it is in an uptrend, but an uptrend this long, all right, you just got to be wary of a a possible breakdown. Uptrends that just start, in my opinion, are the best ones, because an over dragged uptrend sometimes indicates a possible reversing trend. Okay, so just keep that in mind. And again, this is just my opinion on BAC. Alright, so this is a chart of the XIV, right? Looks like I had already done some analysis here a while back on December 21st. Maybe if you watch that video. Looks like I had a calculation here at $15.35. We got a bounce off of that level here, and we just started floating higher. Looks like we came down into this float support level before bouncing higher here. So this does make sense to me. I don't really like the way the chart looks though. There's no pivot points in this chart. You just have this float higher, and then all of a sudden you make a pivot. You come down, you make another pivot, and then now it looks like you could potentially make another pivot there. I do see a reversal candle here, but I don't see it on higher volume or volume higher than the past 3 previous days, so that doesn't indicate a reversal to me, in my opinion. Not yet, at least. Let me see if I can get a mathematical calculation on here, or at least another one. Give me 1 second, I'll be right back. Alright, I'm back. This is the weekly chart of the XIV. Okay, I made 2 mathematical calculations here at 23.79 and 25.39. Don't know if it's going to get there. Don't know if it's even going to hold. The data that I got to create these calculations weren't as solid. If it's not solid, I normally will not, mention it on this video. But I just wanted to see if it'll work for kicks. So just to let you know now, the chances of these mathematical calculations working is not going to be as strong as I normally would say it would be on, say, the SPY, for example. But using standard technical analysis, this is the weekly chart. We have lows, we have higher lows, and we have highs, and we have higher highs. Again, when you have a chart that's overextended like this, we do start looking for a reversal in trend. But this is the weekly chart, so this is more long term than it is short term. We've already broken past this this double top here, and we've broken past, not on higher volume. The next day was the volume part. But there's a potential that we could continue higher. What I would do personally, if it was me, and this may take a while because it is the weekly chart, is I would wait for a pullback into this double top breakout here, and then go long again, because it is again in a confirmed uptrend. And until it tells me otherwise, you have to go with the trend. The trend is your friend. Obviously, you don't want to swim against the current. Let's go back to the daily chart here, and it's the same thing. This chart I just don't like because it's so messy. There's really, what I like to see is, the normal charts that in the uptrend you have pivot points like this. This is a healthy chart when you go up and you have higher highs, you have higher lows, and you have pivot points, and you don't have any runoffs or anything like that. This here is just a float higher before it makes a pivot, and now it's starting to make its pivot thing again. Maybe into the 2379, that's a possibility, and then we come down again to reverse. What I want to see is a reversal off of this 2379, if that's possible, to come maybe down like this. And again, I don't know if this is going to happen or not, but to come right into here for a possible long trade on the upside. That's what I would wait for, in my opinion. But I don't even know if that's going to happen. That's way too far in the future for me to even try to predict that that might be a possibility. And again, this 2379 isn't going to be rock solid like the other ones, but I didn't want to leave you hanging without at least giving it a shot. But it's just something to keep an eye on to see if it's going to work or not. So that's just my opinion on this chart. I really don't like the way it is, how the volume trends are. I mean, if you look at this volume candle, it was right on the doji, so it did indicate a reversal. So this particular chart does look like it follows my volume rules. I guess you could call it that. We had high volume here, but it wasn't for after 3 days, so obviously it may not have worked, so it continued down. It also wasn't into good support, so that volume trend wouldn't have worked anyway. Let's look at for another one, but this one was higher volume than the past 3 days, but it was volume that's been creeping higher like this. We need the way volume works is you want the volume to go down and then spike higher, okay? But let me just look over here. This looks like another one, no volume there. This one no volume here. This one had a nice volume spike, and then a reversal came very small, and it wasn't sharp enough for that volume to take place. So yeah, I mean, it's not necessarily a chart that I really like. I mean, we had an engulfing pattern here, and the pullback was very small, and the engulfing pattern was on high volume. So it's just not something that I like to see. But if you are looking at this to look at the volatility and stuff within the markets, then that's fine. It's not a problem. Anyways, I'm into 22 minutes. That's 8 minutes less than last week, so I am doing a lot better, and hopefully next week I can cut that in half to 15 minutes. But anyways, thank you very much for watching these videos. I really do appreciate it, and I really do appreciate you guys hitting that like button. And please subscribe if you haven't already, so if I ever do make a video within the week or during the week, you guys will get updated as fast as I can post the videos. In any case, good luck to you next week. God bless to you all, and thank you, and I will see you in the next video.